Good evening, everybody. Hope everybody's having a nice summer evening. Tonight, we've got the great honor of having Marc Chaikin here with us. And I say great honor. We've had a lot of speakers, and a lot of speakers have good techniques that I tell people try it and see if it fits your trading nature. The only difference with Marc's is it is something everybody should be using. This is not a unique trading technique. Marc's stuff, and a lot of people have already heard of the Chaikin oscillator, the Chaikin power gauge. This is not, what I want to say, unique stuff. This stuff is on every major money manager's screen. They use this as the industry standard. So we're not looking at something that you might want to try and see if it fits you. You're going to be looking at information that everybody should be using. I highly recommend this, his product, his technique. And so without any more ado, Marc, welcome to the Candlestick Forum. We're all anxious to see your information.
Steve, thank you very much, and thank you for the kind introduction, and also to Becky and the whole team for making this a seamless setup. The topic of tonight's webinar is combining fundamentals with technical analysis to increase your trading profits. A very quick disclaimer, Chaikin Analytics is not registered with any federal agency or state agency. Everything you see is for educational purposes only. We're not making any trading recommendations, and let's get on with it. The biggest question I want you to know you're going to hear answered is what Chaikin Analytics adds to the Candlestick Forum signals. And basically, Chaikin Analytics helps you zero in on winning stocks on both the upside and the downside and makes you the smart money. Keep that phrase in mind because I'm going to come back to it once or twice and end the webinar with that. Tonight, my goal is to help you become the smart money. So what Chaikin Analytics does is it helps you know the fundamentals without being a research analyst, know the technicals without being a market technician, and profit from a proven quantitative model without having to do the math. As a bonus, we have 6 pairs of buy and sell signals, and I think these are very compatible with the candlestick signals that Steve is generating. I sat in on a couple of Steve's webinars just to get a feel for what he teaches. And I'm very impressed with a number of the techniques that he uses. One of them I've actually been using for 8 years, his T-line. And I think Steve has zeroed in on some very, very powerful tools. And those of you who are on a number of these webinars know how powerful they can be. But my goal tonight is to show you how you can become independent of Wall Street, of the gurus, how you can basically find the winning stocks, or the stocks to be short, or buy puts on. Now, the biggest problem we all face today, both as investors and in our personal lives, is information overload. Facebook, Twitter, LinkedIn, your email, the 24/7 news cycle on TV, sites like Yahoo Finance and Google Finance, all sorts of advisors telling you what to do, the headlines in the paper. So how do we solve the information overload problem? Because that's your biggest enemy as an investor. Right at the center of this chart that I absolutely love is the question, how to focus in the age of distraction. And focus is a theme that we're going to come back to over and over again in this webinar. Our solution to this problem is Chaikin Analytics for both iPad and desktop. We're going to be looking at chart examples from our iPad app, which means that all of this information is something you can take with you. If you're on vacation, if you're visiting your grandchildren, if you're at the beach, if you're in the mountains, all of this information is available on an iPad, but it's also available on the desktop. And I think that's really important because this is a very mobile world we live in. Now, what is Chaikin Analytics? It's a methodology that at its core has the Chaikin Power Gauge rating. The Chaikin Power Gauge rating is a quantamental rating. It's basically a model like Value Line or Investors Business Daily. Now, as Steve said, many of you know me from the technical work that I did monitoring supply and demand with the Chaikin oscillator and then Chaikin money flow and the accumulation distribution indicator that I developed for Investors Business Daily. When I launched Chaikin Analytics 5 years ago, I wanted to come back with a product that was more encompassing than just supply-demand technical analysis. So I created the Chaikin Power Gauge rating, which is as simple as the gas gauge on your car. It varies from very bullish to very bearish, and it tells you a stock's potential over the next 3 to 6 months to outperform or underperform the market. At the top of the pyramid, we also feel very strongly that industry group strength and industry group and sector ETFs are powerful guides to where the money can be made in the stock market. At the bottom of the pyramid are just a hand-picked few of proprietary technical indicators that work very well with the quantitative model, and that's where the fundamental analysis comes in, and you'll see that very clearly in the chart examples. And then finally, in the middle are the Chaikin buy and sell signals. Now, I know from being on a number of Steve's webinars that his candlestick signals are spot on, and the doji signals, the morning star, the various patterns that he's identified, scoop, bottoms, and so forth, J-hooks. But Chaikin also gives you some buy and sell signals, and my research tells me they're extremely compatible with the candlestick forum signals. Now, all of this revolves around focus. How do you get rid of the stocks that you shouldn't be watching and focus on the ones that have the biggest potential for profit, so that when you get a candlestick signal or when a Chaikin signal triggers, you're focusing on stocks where the biggest opportunity exists, both on the long and the short side. And what focus leads to conviction. And if you read any of Jack Schwager's books about the market wizards, one theme comes through loud and clear in those 3 or 4 books that he's written. Every successful trader or investor in the stock market has a methodology they believe in, and that leads to conviction. And what conviction does is it enables you to weather the storm. Down 18 points this morning on the S&P futures because Portugal and Italy might be imploding. It enables you to weather the headlines in the paper that are meant to scare you out of stocks. Because why do newspapers put up dramatic headlines? They're trying to sell newspapers. You know, why is Jim Cramer ranting and raving on CNBC? And Jim used to be a client of ours. Because he's trying to create a viewership. All of this can be a distraction, and I believe in focus, and I think focus leads to conviction. So the simplest way to focus is to have a reliable way to know which stocks are going up and which stocks are likely to go down. Whether you're an options trader, whether you're a swing trader, whether you're an intermediate to long-term investor building a retirement portfolio, it's very important to have a methodology that separates the wheat from the chaff. So the Chaikin Power Gauge is like a GPS. It guides you toward winning stocks on the upside, and it also tells you which stocks to avoid on the downside. But as you'll see when we get into the examples, knowing which stocks to avoid also leads to very profitable put trades or short sales. So the Chaikin Power Gauge rating is reliable. It's been back-tested. It's been in the marketplace for 3.5 years. All those results are on our website, chaikinpowertools.com, so go there if you want to see the results. But the real proof is in the charts that we're going to look at, because these are real examples that I've cited in my market letter, in Twitter posts, and blog posts every day. These are examples in real time of stocks where people have had the opportunity to make a lot of money. So what I like to say is that the Chaikin Power Gauge is simple, but it's powerful. It's like a Chevrolet with a Ferrari engine under the hood. And the reason it works is because it looks at 20 factors. We look at financials. These are the factors that a Warren Buffett would look at, the value metrics that constitute about 35% of the model. We look at earnings. This is like a company scorecard. How have they grown earnings? Are they consistent? What are the future projections for the company's earnings? We look at technicals, but they're only 15% of the model. So I've moved beyond technical analysis, And combining technicals and fundamentals is extremely powerful. When all I had was my money flow indicators, what I used to say they didn't even have webinars back then because they didn't have the internet. So in live presentations, I used to tell people that the Chaikin money flow and Chaikin oscillator enabled you to track the institutional money coming in and out of the market. It enabled you to track the smart money. Tonight's webinar is about how you can be the smart money. And the final piece of the puzzle are what we call expert opinions. What are the smartest people in Wall Street doing and saying about individual stocks? And this includes the short interest. Short sellers are the smartest people in Wall Street. They have to be because you can blow up very quickly if you're wrong on the short side. What are the insiders doing? Are they buying their own stock? If insiders are buying their own stock, I think all of you know that they do it for just one reason, because they think it's going up. Insiders are very well compensated. They've got golden parachutes, big stock options. If they put additional money, if they dig into their wallet and write a check and buy stock in the market, they're telling you something. They believe their stock's going up. We also look at analyst ratings, and that's going to be a key component of the examples. Are analysts raising or lowering their opinions about a stock? Are they raising their estimates? Because when analysts raise their estimates, that's the biggest short-term driver of price movement in the stock market. They lower their estimates, tends to have a dampening effect on stocks. And then going back to the financial category, two very key metrics: free cash flow. That's what Warren Buffett has based his whole career on. Does a company throw off cash at the end of the year? You can manipulate earnings with accounting techniques. You can't manipulate free cash flow. And then we look at the price to sales ratio, and a lot of these high-flying stocks like Splunk and Athena and LinkedIn, Lululemon, one of the problems is that you are paying too much for a dollar of revenue. Now, you could research all of this yourself on Yahoo Finance, on FinViz, on Google, if you had 2 hours to spend per stock, and you knew what to look at and how to put them into the mix or in the blender. The Power Gauge rating does all that heavy lifting for you. I spent a year building it. It's based on 48 years of experience of watching institutional investors, what they look at, how they look at the market, how they evaluate these things. Steve was at Kidder Peabody. I was at Shearson Hamel, two firms that had great research departments, highly paid analysts on Wall Street doing this kind of work. The Power Gauge rating does it for you, and at the end of the presentation, you'll see a very dramatic example of why the Power Gauge rating can often be ahead of Wall Street. So the Power Gauge rating in and of itself is a clear-cut summary of a stock's potential to outperform or underperform the market over the next 3 to 6 months. Now, it also works for traders because the stocks that are likely to perform best over the next 3 to 6 months are also the ones that lead the market up and down on a short-term basis. So you can believe me that it works, and you can go see the back-tested results, but to me, the best validation of the Chaikin Power Gauge ratings comes from a partnership that we just established with NASDAQ. NASDAQ back-tested our Power Gauge ratings, and they were sufficiently impressed with the results that on April 1, we launched 3 co-branded NASDAQ Chaikin Power Indexes, large cap, small cap, and dividend achievers. And sometime in late 2014 or early 2015, there'll be publicly traded ETFs from people who license these indexes from NASDAQ. So for me, this is like the capstone of a 48-year career on Wall Street. You can quote the Chaikin Power, NASDAQ Chaikin Power Indexes on any quote machine. I'm very proud of it, but more importantly, NASDAQ has blessed the research that I've done in the last 5 years. So how do you make money with the Chaikin Power Gauge and the technicals? Well, making money on Wall Street is very often overcomplicated. One way to look at how you find winning stocks is to find stocks that are going from the lower left to the upper right on a chart. Another way to look at it is to find stocks that are making a series of higher highs and higher lows if you're looking for buy candidates, or lower highs and lower lows if you're looking for sell candidates. And there, as we'll see, you're looking for stocks that are going from the upper left to the lower right. It doesn't have to be more complicated than that, but we've come up with a pattern that we call the classic bull. And in the Chaikin methodology, a classic bull has a bullish power gauge rating. We're using Comcast back in 2012 as an example, as it was going from 26 to 40 and then ultimately to 54. At the bottom of the chart, and we'll see one that's blown up, so I won't get into it here, is the power gauge rating day by day over the last 12 months. So you don't have to do sophisticated back tests to prove whether the power gauge rating is right for you. All you have to do is look at the chart of the stocks you've been trading or investing in and see what the power gauge rating was saying when you were buying them or selling them. We also look for stocks that are in uptrends. I'm not a bottom fisher by nature. I don't believe in the old phrase catching the javelin. I think avalanches are no fun, and if you get on the wrong side of an avalanche in the stock market, you know how painful that can be. Probably the most important thing on this chart, other than the power gauge rating, is relative price performance. Relative strength is the key to making money in the stock market, and we'll see why in a minute. Finally, Chaikin Money Flow, which does an excellent job of monitoring institutional buying and selling in the marketplace, is a key indicator. And then we look for buy and sell signals in Chaikin Analytics, but you've got a real wonderful set of buy and sell signals in the candlestick forum signals that Steve has been teaching you about and highlighting. So if you use Chaikin Analytics, you get the benefit of our buy and sell signals, but you also get the benefit of the candlestick forum, and they can really fine-tune your entries. Now, unintentionally, when I created this methodology, I mirrored the patterns that a gentleman named Richard Wyckoff discovered over 90 years ago. How many of you in the audience tonight are familiar with the work of Richard Wyckoff? I'm not going to be able to see your responses till later, but I'm assuming that a number of you are familiar with the work. It's being taught today at Golden State University. Hank Gruden has popularized it. And basically 90 years ago, Richard Wyckoff was the guru of his day. And he developed this idealized pattern for the way stocks go up and down. For those of you who've been in the market for a long time, Stan Weinstein, who used to run a service called the Professional Tape Reader, co-opted this from the Manfield charts, who took it from Wyckoff. I found these charts on stockcharts.com, but basically this is the way stocks move up. You go from a basing or accumulation phase, you break out, you pull back, you rally to new highs, you consolidate. It's a pattern we're going to see over and over again in the examples, and I've noticed in looking at Steve's webinars that his candlestick patterns very often correspond to these wonderful entry and exit points that Wyckoff discovered 90 years ago. Now, why did I think it was so important to put this chart up? Because knowing that these techniques, that these patterns have worked for 90 years gives me the conviction, we're back to that word conviction, to be on a webinar like this and tell you that I believe that these techniques that we're going to be talking about, seeing examples of, are going to continue working well into the future because they've worked for over 90 years. So let's look at some specific examples of classic bulls. Here's a one-year chart of Trinity Industries. This is from our iPad app. I've blown up the power gauge on the left. There are the four components. You can drill down and see each of the factors to see what's contributing to the bullish rating. But if you go to the bottom of the chart, you see that the power gauge rating on Trinity, because this power gauge ribbon is going to go from red to yellow to green, depending on what the gauge is saying. The power gauge rating basically turned bullish in July of 13 on Trinity when the stock was in a basing pattern in the low 20s, even below 20. But right above that is our relative strength indicator. And what we've done is to take in the work that you see in Investors Business Daily, which comes out as a number from 1 to 99. And it's not exactly the same as O'Neill's relative strength, but it's based on 120 days or 6 months of comparing price of an individual stock to the market, in this case the S&P 500. And we've converted it to a heat map. So what often happens in the stock market is that a stock will be underperforming the market, but the underlying factors are bullish. And very often money flow will be building up as institutions are accumulating it. These are usually the value investors. Then notice what happens when the stock breaks out here in September. The power gauge is still bullish, goes neutral for a bit, but the relative strength starts to improve and goes green. And at that point, here in early October, Trinity is sitting at about $22 a share. We've just had one of our relative strength buy signals. And the important takeaway from this chart is you've got a model with a high degree of reliability in terms of identifying strong and weak stocks going out into the future. But until the market starts to agree with the model, you don't have the whole package. When the model and the market agree, you get price acceleration, in this case to the upside. When it's combined with Chaikin money flow making these big green spikes, and you can see this on stockcharts.com or almost any charting package, it tells you that the institutions are very aggressive buyers of the stock. Now we've got 4 examples on this chart of what we call our relative strength buy signal, and there's no black boxes here. I'm going to explain how simple it is to find good stocks and get in at the right time. And each of these is followed by price acceleration to the upside, including a most recent move from about $40 up to $45. The stock split 2 for 1. Relative strength buy signal occurs when the stock is outperforming the market, doesn't care about the power gauge rating, dips below its 21-day average, and then rises back above it. A really simple but powerful technique. The reverse is true, as we'll see on the downside. So when that relative strength buy signal triggers and the market is telling you that the model and the market are agreeing, they're both bullish, you get price acceleration. And wouldn't it have been nice to buy a stock like Trinity or add to your position on any of these relative strength buy signals? And this pattern repeats over and over and over again. So here's Ryder Systems, the old truck leasing company that's now called Logistics. Truck leasing is no longer fashionable. So UPS and Ryder, they're all called logistical companies. They manage big fleets of trucks for corporations. They also rent you the trucks that you want to move with. And here again, we see the same pattern. The power gauge turned bullish here in October. The stock was in that basing pattern, that Wyckoff accumulation pattern. It breaks out on heavy institutional buying, so the money flow spikes up. And you get what I call a change of personality. It goes from underperforming the market to outperforming the market. And now you get price acceleration. And Ryder's been a little more volatile than Trinity, but the relative strength buy signals have worked. Now I want to go back to that Trinity chart for one reason. There was a big drop in Trinity in June. It dropped from about 44 down to 39, 38. And the reason it did that is there's a research firm in Boston called Off Wall Street. They've got a fabulous track record of finding short sales, 75% accuracy. They put out an outright short sale recommendation on Trinity right at the top. And because of that, the stock dropped 15%. And here's where that conviction comes in. It never violated our long-term trend line, which is a triple smooth 200-day exponential average. The relative strength to the market stayed green. The power gauge stayed bullish. And even on a 15% dip, this 21-day money flow, Chaikin money flow stayed green or positive. And then we got a relative strength buy signal, and the stock powered out to a new high at 45 just about a week ago. So when I talked about conviction, if you believe in a methodology, whether it's the Chaikin methodology or the Investor's Business Daily or the Candlestick Forum methodology, that level of conviction is going to keep you from getting squeezed out of a stock because one firm puts out a recommendation or because there's a negative headline in the marketplace. So very important to believe in the system and the methodology that you're following. Here's a stock that I know Steve mentioned in one of his webinars, Pioneer Energy. I think there was a candlestick buy signal on it. Power gauge rating turned bullish in August of 13 when the stock was trading at around 7.5, went all the way up to 18. little choppier, relative strength turned bullish, so everything looked great up here at about $8.50 or $9, but then you got a correction. And finally, things sort of reasserted themselves in January when the stock was still in the 8.50, 9 area. And you got two money flow buys that triggered entries. You could have added to your position, could have established initial positions in puts, in call options rather, or in the stock, and it's moved up to 18. This is one of the stocks that the Obama administration is allowing to ship crude oil offshore. It's one of two companies, and the stock is really powered ahead, and it's in a very, very strong industry group. So 3 examples of our classic bull.
Marc,
the classic bear is...
Marc, let me interrupt here just for a second. I usually don't do this, but for everybody that's watching, take a note of where his buy signals are and go back and see the exact candlestick signals that correspond with that. I mean, if you put the combination of these two factors together, I mean, you're going to have an extremely strong trading program that's going to put you in the right place at the right time. They're just correlating practically 100%. So anytime you see one of his little buy points, go back and see what the candlestick charts and the signals were at the time. Sorry to interrupt you, Marc. I just thought it was important enough to kind of point that out to everybody that these are fitting exactly together.
No apologies. I'm very pleased that that you're highlighting the fact that these two approaches are very compatible. From my point of view, the key is the power gauge rating. That gives you the conviction that if you see a candlestick signal, it's in a right stock. It's in a stock, and if the industry group is strong, that's even better. I believe the industry group strength puts the wind at your back. I'm a big proponent of trading and investing in strong stocks and strong industry groups. So Steve, keep coming in whenever you see something like that, please. So the mirror image is the classic bear. We're using LinkedIn as an example because it was a market favorite. Power gauge turned bearish in December. The stock hasn't really been able to rally since then. And it's the exact opposite. Bearish power gauge rating, downtrend, relative performance to the market is weak. Chaikin money flow shows that the institutions are selling. And then either look for a sell signal in the candlestick form or in Chaikin analytics. So let's look at a couple of examples of the classic bear. But before we do that, here's Wyckoff on the downside. This is the way stocks go down. They make a peak in this big distribution area. Typically, tops take longer to form than bottoms, as most of you know. Bottoms are often V-shaped, but as we saw in some of those other examples, very often there are long basing periods. Then they break down. They rally to the breakdown point, make lower lows, consolidate, and so forth. And let's take a look at a couple of examples of classic bears. This is one of my favorites only because Whole Foods has completely duped Wall Street. They duped institutional investors. They duped analysts. Why? Because it's a supermarket company. And it got a premium price earnings ratio. It got a premium price to sales ratio. But at the end of the day, Kroger is competing with them in the Whole Foods space. A lot of competitors in the Northeast, the fresh market, have cropped up. There's no barriers to entry in this business, but Whole Foods has had this mystique. And the stock was outperforming the market. We see that in the left-hand side of the chart. Green. You don't have to look at the numbers. If it's green, it's outperforming the market. If it's red, it's underperforming the market. But Whole Foods has disappointed Wall Street 3 times in the last 9 months. And by that I mean they've come in below analyst estimates when they report quarterly earnings. And that's like a death knell for a stock. And they've guided lower. Guidance is very important. What is the company management telling you about the future? And then the stock undergoes a personality change. And I owe this to my son Eric, who's the heart and soul and the brains behind this great user interface and display. But in November, December of 13, Whole Foods goes from outperforming the market to underperforming the market. And once it breaks that triple smooth 200-day average, it never looks back. It rallies up to it, makes new money's coming out of it. And right before the last earnings report in May, we got a relative strength sell signal. Exact opposite of the relative strength buy. The stock's underperforming the market. It goes above its 21-day average and drops back below it. And in my weekly market insights, which gets bundled with Chaikin Analytics, I made Whole Foods one of my bearish stocks of the week. I typically have one or two stocks that I highlight. And I like to highlight stocks that are about to report earnings because very often you see this kind of activity after the earnings are reported. So I made Whole Foods my bearish stock of the week because it had triggered a relative strength sell signal, and I knew that the earnings were due to come out in the next week. It had gotten overbought, and sure enough, when they disappointed Wall Street and guided lower, the stock gapped down 20%. And my biggest nightmare as a trader or an investor is to wake up, turn on CNBC, and find out that a stock that I'm long has just disappointed Wall Street and is trading 20% lower in the pre-market. Now, if you believe in the Chaikin methodology, you wouldn't be long this stock. You'd be looking for opportunities to buy puts or go short, because what we believe is that if the power gauge rating turns bearish, that stock should be out of your portfolio, off your radar screen from the long side, and a stock where you might be looking at opportunities on the short side. Doesn't mean the stock can't go up. It means there are better places for your money. Now, in the supermarket business, you could have been buying Kroger all through 2013, and Kroger went from the bottom left to the upper right. A mundane supermarket chain outperformed Whole Foods. And that's what you're looking for. You're looking for the stocks that are most likely to outperform the market. Now, in the bottom right here, I've highlighted the fact that after about a 2-week basing period, Whole Foods rallied, probably short covering as the market was making new highs, but it couldn't really fill the gap. It got overbought. We don't have a signal there, but I'm sure there was a candlestick signal that triggered after that rally up to this upper volatility band. The point being, you don't want to buy when the stock is at the upper band. You want to be looking for shorting opportunities if the power gauge and the relative strength are negative. And we got a wonderful testimonial. Someone bought put options on that Whole Food recommendation and was very happy with the results back in May. Now, another example of a classic bear is GNC. It's the company that makes the nutritional supplements. Same business as Whole Foods, food, drug, retail, and wholesale, and a very similar pattern with all these overbought sell signals to go along with the bearish power gauge rating, negative relative strength, and all this institutional selling. And another stock that's making new lows as the market's making new highs. And I know this is a stock that Steve mentioned in one of his webinars because that's the reason I included the chart here. Now, if you follow the Chaikin methodology, one thing I know you're going to do is to play offense well. And to me, that means knowing what to buy. So here are a couple of examples of playing offense well, and they're different types of stocks because the power gauge rating is eclectic. It's not just a value rating. It's not just a growth or an earnings momentum rating. It finds a lot of ways to like a stock, and therefore it likes a lot of different kinds of stocks. So here's Caterpillar. Power gauge rating had been bearish all through the spring, summer, and fall of 13, and you got a series of relative strength sell signals. And then in mid-January of 14, the power gauge rating turned bullish, and the relative strength had already started to improve. And look at the money flow. The institutions were buying the heck out of this stock. They believed in Caterpillar when other people were seeing this as a coal mining machinery stock. They saw the potential of China and of the product mix that Caterpillar has built, and you've got a series of relative strength buy signals that would have been excellent entry points. Now, the power gauge rating has turned neutral here, and the stock is having trouble up near its new highs of about 110. So the game may be over in Caterpillar. We'll see, but the money is still flowing into it. And now let's look at a totally different type of stock, Apple. Now, Apple had a bullish power gauge rating from 120 up to 680 when it turned neutral. Never turned bearish, but you got a series of relative strength sell signals on the way from 680 down to 380. when it made its low, now split 7-for-1, as we know. Look what happens when the power gauge rating turns bullish again in mid-April. Now, it came on a gap up. Why did Apple gap up? Because the earnings that they reported in April were better than analysts were expecting. In January, they disappointed analysts. It gapped down. It spent about 3 months in a basing period. The power gauge turned neutral. The stock was underperforming the market. But when they reported better iPhone sales than analysts were expecting, the stock gapped up, and it basically hasn't looked back. And look what happens in early May when everything is lined up. The power gauge rating is bullish. The stock is outperforming the market, and the money flow is telling you that the institutions are buying the stock again. And then we got a momentum breakout. It's one of our 6 signals at a price of about 83, and I featured this as one of my stocks of the week, and the stock has moved up to 95. This is an example of a high-tech stock where everything lines up. You get a buy signal. Again, I'm sure there was a candlestick signal in there. I don't think it violated the T-line back in here, and a great entry point in Apple. And then finally, SanDisk, which I know is a stock that Steve has commented on in one of the candlestick forums recently. It's in the very strong semiconductor group. We're going to take a look at some ETFs, and semiconductors is one of them. But the power gauge rating has been bullish since late August. Stock started outperforming the market. It had that personality change in October. And look at this money flow. The institutions knew that the semiconductors were going to be strong. And these 4 relative strength buy signals, all of which would have given you low-risk entry points. So these are examples of playing good offense in the stock market. The power gauge rating also enables you to play good defense, and defense is something that is not stressed often enough in webinars like this. Now, to me, playing defense means 3 things. It means having good risk management and money management skills. You've got to limit your losses. You've got to prune your losers. Can't let any one stock turn into a disaster. It also means getting stocks with bearish power gauge ratings out of your portfolio. If you've got a 401k plan, you don't want to be in stocks with a bearish rating. There are better places for your money. It also means turning landmines into gold mines. And what do we mean by that? Well, here's an example, Lululemon, and again, I know that Steve had a wonderful candlestick sell signal on Lululemon, and this is another example of where Chaikin and the Candlestick Forum are so compatible. And if you want to jump in here, Steve, don't be shy. But basically, Lululemon.
Mark, I'm already typing in. Yeah, I'm already typing in that every time you show where one of your buy or sell signals are, I'm telling them look to see what the candlestick signals were at the exact same time.
Yeah, I saw that on one of your webinars that I looked at this morning, and the Lululemon is a stock that I love to hate. I featured this 4 times as my bearish stock of the week in the last year. Why? Because the power gauge rating has been bearish. The stock has been underperforming the market, and the institutions can't sell this fast enough. And the reason is, it goes back to the price-to-sales ratio that we talked about when we looked at the 20 factors. If you pay too much for $1 of revenue, and at its peak, Lululemon had a price-to-sales ratio of over 10x, that means you were paying, if you were buying a stock, you were paying more than $10 for every $1 of revenue. Now, what does Lululemon do? How many of you out there have wives who are Pilates students or do yoga? Well, they're buying, some of them, overpriced exercise gear from Lululemon that they could get for 60% cheaper at one of Gap's new stores, Athleta, or even at Dick's Sporting Goods. And what I like to say is, if you own a stock with a high price-to-sales ratio, you're on a high wire without a safety net. Everything is great. We're going to see the next example in Splunk when the stock's going up because the momentum buyers are buying it. But when something goes wrong with the business, the psychology changes, if the competition gets more aggressive, you're on a high wire without a safety net. And that's what you're looking at in Lululemon. In the case of Lululemon, everything went wrong. The founder resigned. The chairman of the board started selling stock. They had to recall their most popular product, these sheer exercise pants, because they were a little too sheer. And the stock started to disappoint from an earnings point of view. And every time it disappointed, the stock gapped down. Now, this one was preceded by a relative strength sell signal. And I featured that as a bearish stock of the week back in December. It happened again here in June. Again, it was a bearish stock of the week. This is just a stock that I love to hate. Eventually, this may find the bottom. There's been rumors of taking it private. The founder has come back in and trying to line up a bid. But the bottom line is you don't want to own a stock like this, and you want to look for opportunities to buy put options to be short the stock. And I know in one of Steve's webinars, he talks about a 70% win ratio as being possible with his candlestick signals. So I'm going to be a little more conservative and say about 65% of our signals work because they're filtered in many cases in all cases by either the relative strength or the power gauge rating. So the wind is already at your back, and then the signals guide you to the entry point. So here's another stock that was a huge high flyer. Big data, cloud computing, as many of you know, was the favorite of the momentum investors in the latter half of 13 into early 14. And Splunk, which is a company that analyzes data in real time, went from about $20 to over $100. And at that point, it's just hard to believe, it was selling at 40 times revenue. Now, would you buy a business for 40 times their revenue? If someone said, I'll sell you my dry cleaning store, it does $100,000 in business, and you said, what do you want for it? And they said $4 million, you'd just walk out laughing. But investors, momentum investors, will do that. And I've done it. As Steve likes to point out, before he developed his candlestick disciplines, he lost money every which way from Sunday. I did the same thing. That's part of the reason I built the Chaikin power gauge rating, because I know that fundamentals matter, and it's a very easy way to get a quick fundamental read on a stock. It can be a primary source of ideas, or it can be an independent, unbiased check on ideas that you're getting from Barron's or from Jim Cramer on TV or from a trusted advisor or even from the Candlestick Forum. So what happened with Splunk? Well, when it broke down technically, there was no bottom for the stock. The power gauge rating turned bearish in mid-March when the stock broke its long-term trend line. And it just kept going lower. And in mid-April, I made this my bearish stock of the week. And the reason was it had just triggered an oversold buy signal. An overbought sell signal. It was underperforming the market. Money was coming out of it. The power gauge was bearish. And they were due to report earnings in a week and a half. The stock was 65. What happened? They disappointed. The stock traded lower. Ultimately, it dropped from 65 all the way to 39. That's what happens when you buy a stock with a very high price to sales ratio and you don't follow the power gauge if it turns bearish. You're on a high wire without a safety net. So that's an example of playing good defense. You get that stock out of your portfolio. If you're looking for short sales, you put it on your short sale radar screen. You wait for a candlestick sell signal. In this case, the stock couldn't even rally up above the 21-day average, so you never got a relative strength sell. You got an overbought sell. Now, the overbought sell is interesting because it meshes so nicely with the candlestick patterns. It's a very simple technique that I learned from Larry Williams. It happens in a stock with a bearish power gauge rating, so you've already put the odds in your favor, that gets overbought and makes a new 8-day high. Now, at that point, it may be above Steve's T line, but if you get a candlestick sell signal at that point, it drops below the T line, which I know this stock did at around 60, maybe 61, on its way to 40 in just 3 weeks. You've got everything in your favor. Money flow, relative strength, the power gauge, the signal, the T-line being broken. This is how you make big money in options. And I think this combination of the candlestick signals and what we're doing at Chaikin is really powerful. Now, 6 pairs of buy and sell signals. I won't get into them. All of the rules are on our website, fully disclosed. very compatible with candlestick forum signals. And here are two examples, one on the bull side, one on the bear side, of the signals in action. Here's Broadcom in that very strong semiconductor group. And you had a wonderful oversold buy signal here in May as the stock pulled back to this long-term support line. And then you got another oversold buy signal here in mid-June. And the stock has bounced up, and the money is still flowing into the semiconductor group. Now, on the downside, Pandora is a stock that was one of my featured stocks in this week's Market Insights. I had two featured stocks. One was Alcoa, which was my bullish stock of the week, and another was Pandora, which was my bearish stock of the week. Now, why did I put out a bearish recommendation on Pandora? Three reasons. The stock retraced 50% of its decline from $40 down to $20. It rallied right up to this long-term trend line. It actually rallied 50% from its low, and it triggered a relative strength breakdown signal with a bearish power gauge rating and underperforming the market. Now, there was good money flow, but I was prepared to tell people that this is one of these former high flyers that's now giving you an opportunity to exit the party if you've overstayed your welcome, but it's a great opportunity to buy a put option. Right at an upper volatility band, right where it runs into resistance on a 50% retracement. It just doesn't get any better than that. Now, all you need to do to be a smart trader is to have a little bit of a money management discipline and say, okay, if this stock breaks through that trend line and closes above 32, I'm going to close out my short position. As long as it goes below that T line and stays below it as it did, you've got a really good short position on, and this stock is having a hard time rallying even after a 14% decline since last Friday. So a lot of people have said to us, these signals are great, but how do we find them? I don't want to dive through hundreds of stocks. And in response to that, we created our dashboard alerts. And this is an example from our iPad app of the dashboard. Now, what we're looking at here is the dashboard from April 22nd. I was pretty cautious on the market in April, and I was looking for sell signals. And I follow about 90 stocks in a list to create your own list, hundreds of them if you want. That's obviously overkill. And on April 22nd, LinkedIn at 177 gave an overbought sell signal. That stock dropped 40 points to a low of about 137. Lululemon triggered a momentum breakdown at 49. We just saw where that stock went. It went under 40. And Coach, which we're going to look at in a minute, was 49 and triggered a relative strength sell signal. So on any list of stocks, on any industry group or ETF, you can see the stocks that have triggered signals in the last day or two. We go back a day in case you miss it. So let's just quickly look at ETFs, and we have a very different view of ETFs. You can trade them, you can buy options on them, or you can use them to find stock and options ideas. And we've grouped the 400 equity-oriented ETFs into categories, because any of you who trade ETFs, and type Y into the question box if you trade ETFs, and I'll see how many of you responded. You know that in the equity sector, the financial sector, there could be 10 or 15 different ETFs. How do you know which one to trade? Well, we rank them by the power gauge ratings of the components. But what I like to look at are the 9 spider sector ETFs, but more importantly, the 20 subsector industry groups. And I'll show you why now. Let's say you tap on the iPad on spider subsectors. We rank the 20 industry groups in that category from strongest to weakest power gauge bullish versus power gauge bearish. So the strongest sectors have been the REITs, the transportations, oil and gas exploration, and then number 5 out of 20 are the semiconductors. So if I tap on semiconductors, I bring up a chart of the XSD, which is the Select Spider Semiconductor, and you can see how strong that's been for the last year. Now, we don't have a power gauge rating yet for ETFs, but we hope to by the end of the year. at which point we think we'll be like the morning star of ETFs. And notice how the semiconductors since January have been outperforming the market. It's been a great group to be in. Violated some trend lines along the way, but basically, as we saw with Broadcom, and we're going to see with another example here, semiconductors have outperformed the market. May have made a double top in here. We don't know yet. We'll have to see what the next rally looks like when it comes. But this is what the dashboard alerts look like for the semiconductor ETF this morning. Showed buy signals on 5 stocks, including Intel and SWKS. So you're alerted to the opportunities, the actionable semiconductor stocks before the opening. Now, by tapping on SWKS, we see that Skyworks has had a bullish power gauge rating since July of 2013 when the stock was 25. It's moved up to 50. It's been outperforming the market. Money flow is good. And there's that money flow buy signal that was on the dashboard this morning. Now, I told you that we rank ETFs and industry groups, 65 industry groups, by the number of stocks with bullish or bearish power gauge ratings. So if I swipe down to the bottom, which I did 2 months ago for a webinar, the XRT, the retail ETF, was one of the weakest groups within the S&P 500. If I tap on it, I get the chart, and there's a wonderful relative strength sell signal on January 6th. These two did not work as well because the market was rallying to new highs, but the XRT has barely eked out a double, triple top. It hasn't exceeded this December. And what I'd like to do is to find weak stocks within the XRT to use on the short side. So when I did this in April, Amazon and Groupon stood out. And there's the GNC that we were looking at before, trading at 44 back in April, trading under 40 now. Amazon stood out because the power gauge rating has been bearish for over a year, and I knew they were due to report earnings. And Groupon stood out because this is a company that just disappoints over and over again. So by tapping on Amazon, I bring up the Amazon chart, and I see that the power gauge rating turned bearish in mid-January when the price was around 380. And along the way, the relative strength turned negative, and I made it my bearish stock of the week in mid-April when the stock was about 330 because it had triggered an overbought sell signal. Remember, new 8-day high, bearish power gauge rating, overbought. And the stock dropped down to 280. They reported earnings, they disappointed. It spent the last 3.5 months regrouping, still can't get through this long-term resistance line. And this is a great stock. I think if it breaks this 320 area, it's going to test 280. That remains to be seen. It tested it this morning and bounced up to 329 after trading at 322. But it's an example of how you combine the power gauge rating and the relative strength with the signals to find the winners. Groupon, same thing. Negative earnings report came out after we saw that stock gap down 15%. Look at all this institutional money coming out of it. Relative strength is bearish. The power gauge has been bearish since November. And remember I said doesn't mean the stock can't go up. Even after a bearish power gauge rating, the stock rallied from 8 to 11.5. I don't care. I want to be in stocks where the probabilities are on my side. I want to sleep well at night. I don't want to wake up in the morning and have a stock gap down. So 2 examples. And now let's look at a very current example, and I think this is just going to blow you away. At the bottom of the list yesterday were the home builders, XHB, in the S&P 20 subsector industry groups. Look to the right at the bottom of the chart. LL, Lumber Liquidators, gave a sell signal before the opening yesterday. The stock was 76, and it was in a weak industry group. Only 4 stocks in the home builders have bullish power gauge ratings, and 12 have bearish. Contrast that to semiconductors or REITs, and you see the difference. Now let's look what happened. First of all, we look at a chart of the XHB. Home builders are underperforming. They didn't make a new high here. They've broken down. Relative strength has been negative. They got overbought. And now let's look at the dashboard. The lumber for the XHB yesterday. Overbought sell signal, LL 76.59, Wednesday, July 9th. So if you came in yesterday morning looking for something to go short and you were looping through these 20 S&P groups, you would have seen lumber liquidators as an overbought. And this is what happened. The stock guided lower, disappointed Wall Street. It went from 76 to 56 in 2 days. We've seen this happen over and over again. I'm not cherry picking examples. This is just combining the three disciplines, power gauge rating, relative strength, money flow with the signals, and they can be candlestick signals or Chaikin signals. It doesn't matter. Anything you really feel confident with, it gives you conviction. So one final set of two examples. The power gauge rating can help you find winning plays during earnings season on both the long and the short side. So I mentioned that Alcoa was my bullish stock of the week this week, and why did I do to report earnings on Tuesday after the bell? Power gauge had turned bullish in late March. Stock had been outperforming the market with positive money flow, but the factors kicked in when the stock was around 12.50, and it had just triggered a money flow buy signal. So I made this my bullish stock of the week because I felt that the company would report better than expected earnings. They had done that for the last 2 quarters. They're restructuring. Alcoa is no longer your grandmother's aluminum company, even though they make Reynolds wrap. They're actually making parts for aircraft engines made out of aluminum. Ford is introducing the first all-aluminum truck, the F-150, next year. They're making wheels for cars out of aluminum. Alcoa is transforming itself right in front of our eyes, and the power gauge rating picked up on that, probably because the analysts started to get more bullish. So here's an example of how the power gauge rating can help you in earnings season. Stocks with a bullish power gauge rating that are outperforming the market are twice as likely to report a positive earnings surprise as the average stock. And then let's look at my favorite stock on the downside, Coach. This is the gift that keeps on giving. Coach has disappointed Wall Street 4 quarters in a row. It's a favored darling. It's a brand that had really caught on, and Wall Street just wouldn't give up on it. But finally, the stock gave up on Wall Street. But I've circled all the times when they reported and disappointed and the stock gap lower. And the last time it was preceded by a relative strength sell signal. And I actually made this one of my bearish stocks of the week in Market Insights. And there you see the fact that when the market and the model agree, you get, in this case, price deceleration to the downside. And Coach just can't get out of its own way. Power gauge has turned neutral because the stock has gotten a little cheaper on some of the value metrics, and the price earnings ratio is down to 10. But this stock has dropped from over 60 to 30 while the market's been making new highs. So here's my favorite example. It goes back to August of 2012. I was on CNBC's Fast Money halftime report, and they asked me about Priceline, which was due to report the next day. And I said, well, the power gauge rating is bearish, and the likelihood of a negative earnings surprise is very, very high. I would sell this stock ahead of the earnings report. John Najarian was on the panel, and he said, well, I like Priceline, but if Marc Chaikin's bearish, I'm going to take a closer look. And what John Najarian did, which we found out the next day, was that he flip-flopped and went from calls to puts and paid $1.80 for some out-of-the-money puts that traded at 42 the next day. So a 23 times return in one day on a 100-point drop in Priceline. And believe it or not, that's not unusual. We've seen that in Chipotle. We've seen it in Intuitive Surgical. If you follow the discipline, occasionally you're going to get lucky and hit a 10-bagger. Now, if you look at the bottom of the chart, and this chart is from 2012, in late November of 2012, at a price of about $660, the power gauge rating on Priceline turned bullish, and the stock went up to $13.50 over the course of 2013, and the power gauge rating stayed bullish almost the whole way. It turned bearish about 6 weeks ago, And after we complete the PowerPoint, we're going to go to a live desktop version, and I can show you Priceline, and the power gauge is now bearish, so it's not a stock I'd be trading on the long side. I'd be looking for opportunities to go short. And we're going to end with the theme of being the smart money. Remember, I asked you to remember that phrase. Here's DreamWorks. It's a one-year chart. This is this company that makes those wonderful animated full-feature cartoons. And the stock had been outperforming the market. But the power gauge rating turned bearish in January when the stock was 34. Now, there's a new service out called TipRanks. It's free. I like it. It ranks Wall Street analysts. And it ranked Jessica Cohen at Merrill Lynch, a 5-star analyst on media stocks. Jessica Cohen put out a sell recommendation on DreamWorks on April 28th when the stock was trading at about $26. Power gauge rating turned bearish at 34. You can be the smart money. You don't have to wait for Wall Street. You don't have to wait to hear it on Cramer or read about it in Barron's. If you follow the power gauge discipline, you can be ahead of the curve. And bless her heart, very few analysts put out sell recommendations, so at least she had the courage to do that, and the stock dropped all the way from 26 to 22 based on Merrill Lynch selling the stock and telling their institutional customers to sell. It rallied all the way up to 28. And then it gapped down again on some bearish earnings news, and it made a new low at 22. It's an example of how you can be the smart money. Power gauge is bearish. The stock is underperforming the market. You get a sell signal, follow it. So I hope that you've come away from this webinar believing that you can do it, that you can be independent of Wall Street brokerage firms, high-priced investment advisors, gurus on television, that you can follow people like Steve and myself with a measured discipline and make money consistently in your trading and in your investment accounts. And I believe so passionately in this that I want to encourage as many of you as possible to have the advantage of Chaikin Analytics. So the normal annual subscription price for Chaikin Analytics for both iPad and desktop is $1,950 a year. As a webinar special, we're offering that for $1,750. Go to chaikinanalytics.com/sign up, type in the offer code CANDLE, or call Paul Sherwood on the number on your screen. Now, $1,750 is less than $150 a month, but many of our clients have told us that by following some of the signals and the trades and our market insights, they've made back the cost of the subscription in the first trade or the second trade. And here's someone who did it in Amazon. But as an added incentive to subscribe to an annual subscription for Chaikin Analytics, we're offering a fast action bonus. We're taking an additional $200 off to anybody on the webinar who subscribes to Chaikin Analytics by midnight Sunday, July 13th. So you've got 4 days. Think about it. And get this for about $125 a month. And I really believe passionately that this will make a big difference in your results at the end of the year. So here's what you get with Chaikin Analytics. You get a one-on-one tutorial that gets you up and running, familiar with all the features. You get the charts we've been looking at with the power gauge rating and the proprietary technical indicators, 6 pairs of buy and sell signals, which you can use as a companion to Candlestick Forum, our industry group and ETF research. You get research reports on 5,000 stocks updated nightly based on the power gauge rating, a portfolio health check on any list in the system that highlights which stocks are going to report earnings the next week, where the power gauge rating has changed, and recommends potential swaps from weak stocks into strong. And most importantly, you get my Chaikin Market Insights weekly newsletter with a stock of the week, and very often it's a bullish and a bearish stock. And the track record there over the last 2 years has just been fabulous. I'm very proud of that. So the reports are on the iPad. You flip the iPad and you get the report. Portfolio Health Check, the same thing. And one of our users is very happy with the payback on that investment. So subscribe to Chaikin Analytics and let the power of Chaikin Analytics coexist and support the power of Steve's candlestick signals And I tell you that your trading results, your investment results will improve dramatically because you're putting everything in your favor. So I'd like to thank you all for staying with us. And now I'm prepared to answer any questions, and we're going to go into live mode, assuming everything has stayed. And this is Chaikin Analytics for desktop. And I can now see your questions.
Mark, let me do one more. Let me do one more interruption.
You bet.
Our philosophy, or my philosophy, when it comes to investing, is you definitely want to put all the probabilities in your favor. And many times I have thought of putting together a program that not only will the charts tell you when things are happening, but what all the other indicators are telling you are confirming that that sell signal or that buy signal. And basically, Marc has done that. I mean, this is why I'm so excited about his product in conjunction with candlesticks, because the signals are going to tell you what's going on, and his system is going to tell you what's going on. When you combine those two factors, once again, you're putting all the probabilities in your favor and just doing everything possible to improve your correct trade ratio. So I'm sorry to keep interrupting, Marc, but
no, I love it.
We're going to do a lot together here. Thank you.
Well, I look forward to that. Thank you for that endorsement. I put up a chart of TRW. After the close today, actually before the close, TRW announced that they had gotten an unsolicited takeover bid. Power gauge rating turned bullish on TRW in February when the stock was trading at about 72. This company is going to be taken out above 100. Power gauge rating has been bullish most of that time. The money flow has been positive. It's been outperforming the market. We've seen a number of stocks in the last 3 months that have gotten takeover bids that have had bullish power gauge ratings. Some of them are value stocks like insurance companies. Other of them are, more mundane industrial companies like TRW. I'm looking at the questions. There's one theme that you seem to be more than 65% accurate. I'd say 65% is a realistic expectation from the signals. Now, if you combine the power gauge with the relative strength and the money flow, I think the candlestick signals will be more than 70% accurate, because I've seen Steve's work and I know it's good. We've got a question on whether or not this works for intraday trading. We only use daily bars. What I would recommend is that you get a list of stocks with bullish power gauge ratings and trade them from the long side. There's a question about whether there's a monthly subscription. Yes, we have a monthly subscription. It's $195 a month, and it runs month to month, so it's a less expensive way to get into the game. But this $15.50 price for a year is really $125 a month, and it's a big discount. There's a question from David: do we give a 30-day trial? David, we tried that. The problem is people just didn't devote the time in that 30-day period to get to know Chaikin. And it takes us, we devote a lot of energy to onboarding our new clients. We do a one-on-one session. We are going to institute a call-in where you can call in once a week at a predetermined time and ask any questions. We just found that the trial was not working for us. We were investing too much. The clients weren't investing enough, and they didn't get to see the real value of the program. There's a question: does this work on dividend stocks? And the answer is yes. It can steer you away from the Procter and Gambles of the world, which have a high dividend but don't have a good power gauge rating. And how do I know it has a high dividend? Well, I just click over here and I see it's got a 3% yield. And then I bring up the power gauge rating with the components, and I can drill down and see what contributes to the bearish rating. But it's also identified Kinder Morgan, which has a wonderful dividend, KMP. Again, we're looking at our desktop app. So the power gauge turned bullish on Kinder Morgan here in the February-April period. The stock's done quite well. And here's the stock with I think a 6.75% dividend yield. and the power gauge and the money flow have kicked in. The relative strength hasn't kicked in yet. I'd like to see that happen, because if it does, I think this stock's going to make new highs above 90. Any individual stocks people would like to look at? Okay, they're coming fast and furious. Apple, we showed you the charts, so it made new highs in here. It's made a double top. This is a stock which is going to report in about 2 weeks, as long as they come through with better than expected iPhone sales. And the channel checks that Morgan Stanley is doing say that they will. The stock could make new highs above 100, which would be the equivalent of 700 on the pre-split stock. Let's look at the XLF financial ETF. XLF has been underperforming the market. The strong ETFs in the sector space have been energy, healthcare, technology, and utilities. The financials, retail, consumer discretionary, consumer staples have been underperforming. So there are winners in there, but they're not easy to find. Wells Fargo, they're going to report tomorrow before the opening. So Wells Fargo has had a bullish power gauge rating for over a year. They don't have as much exposure to Europe as Citicorp and JP Morgan, and therefore they didn't take that big hit with the Portugal bank failure. So Wells Fargo hopefully reports better than expected earnings. Stock makes a new high. We don't follow Canadian stocks unless they trade here like Canadian Pacific, but we will have a model on Canadian stocks before the end of the year. Bank America, contrast that to Wells Fargo. The power gauge rating had been bullish. It turned neutral. The stock has been underperforming. If I'm in a bank, I'd rather be in Wells Fargo. They're the wind is at my back and everything's in my favor than a Bank America. I had a question about GNC, which we included, so we know this is bearish. These are the stocks you want to avoid. If you own stocks like this, sell them. Don't bottom fish. This is the wrong kind of market to be bottom fishing. Occasionally you'll catch a winner, but more times than not, you'll get hooked. Let's look at CIG. This is how easy it is to use Chaikin Analytics. Cigna had been bullish for over a year. It turned bearish very briefly, and now it's turned bullish again. We can also look at a 5-year chart, and it'll show you that Cigna turned dramatically bullish in the middle of 2012 at a price of around 40. The relative strength kicked in about 2 months later. The stock was about 48, and it went all the way to 90. With this one little aberration of a bearish power gauge rating. It doesn't happen often. Now, how do you find the signals? Let's say you want to see all the overbought buy signals. You just click on the signal window, and you can look through the various signals. This is the relative strength signals, which work well on the upside, not so well here on the downside. Let's look at, here's a name I don't know, APHN. No, we don't have that in the system. Let's PRN. Someone's very anxious to see PRN. So, Ed, let's take a look at that one. Biotech stocks are interesting. Typically, the large biotech stocks we're more reliable on than the lower-priced biotechs, because a lot of these lower-priced biotech stocks just don't have earnings. So let's see what the PE ratio is. It's unavailable because you've got a stock with $106 million market cap and no earnings. Now, they may have a great product in the pipeline, ready for FDA approval, but the power gauge is bearish, and this is a stock where I don't think we can be of much help. Now, you did get this wonderful relative strength buy signal here in January at 5 on the way to 13, so it's not like we're helpless, but it's better on the larger biotech stocks than on the smaller ones, although occasionally you'll see something good like that. Someone's asking about Schlumberger. Schlumberger just turned bullish. Price was about 102. It went up to 116, so it's outperforming the market. The industry group is strong, oil, machinery, and oil service. Now, how do we know that? Well, we've got an industry group rank, but I've got to expand the chart to show you, and now you're not going to be able to see it. But the industry group is strong, and therefore everything is in your favor. AutoZone, interesting stock. We're going to look at CarMax after AutoZone. AutoZone has had a bearish power gauge rating since April. It had been bullish for this big move up from 420 to 560. Power gauge rating turned bearish in April and then again in July, and this stock's underperforming the market. Let's take a look at CarMax, big used car site. Power gauge rating's been bearish since February. Stock took a deep dive and then gapped up because they reported better than expected earnings. It can happen. All these relative strength signals were positive winners, but the stock has spiked up, outperforming the market. Power gauge is neutral, don't have a strong failing there. Qualcomm, that's an interesting name. Now, Qualcomm has had a bullish rating. And the rating is now turned neutral and it's starting to underperform the market. So Qualcomm is a stock that I wouldn't be playing on the upside. Now, what they do is they make the chips for Samsung and Apple, and Samsung's running into some headwinds. But what I would trade is perhaps CRUS, which makes the sound chips for the Apple iPad and has a bullish power gauge rating and started outperforming the market. Now, Cirrus used to report earnings before Apple. And then smart people on Wall Street got wind of the fact that you could get an advanced tell on Apple's earnings depending on what Cirrus reported, because Apple was 80% of their business. I think Apple told Cirrus, not so fast, guys. You're going to report after we do. So Apple now reports first, and then Cirrus reports. So if Apple reports good earnings, you can expect a big spike up in Cirrus. So let's take a look at two airlines. Someone asked about Delta, and I'm going to put up Southwest first because that's the real cream of the crop in terms of stock performance in the airlines. The power gauge has been bullish since September. Stock was around 14. Relative strength turned bullish when it broke out. Remember that Wyckoff pattern. Money flow, relative strength, power gauge, breakout at about 15.5, 16 on its way to 28. Delta looks completely different. Delta has broken down. I don't know why. I haven't dived into the news. But look at the difference between Delta and Southwest. Now, one thing you can do in Chaikin, this is part of the transportation group, so you can click on that. And now all the transportation stocks come up ranked by power gauge rating. So I don't like the price action in Delta, but JetBlue has wonderful price action. They all gapped down yesterday. But JetBlue and Southwest look to me to be the best trading stocks in the group, and also Spirit Airlines. So there are three stocks. There's a question, are there any exit signals? We typically haven't programmed exit signals. I think the candlesticks are probably your best bet for exit signals, or if you get a divergence between some of our indicators and price action, as you did in Yahoo. So here's Yahoo Finance. Yahoo, which started to show negative money flow as it was making its highs back here at 42 in January. Power gauge turned bearish on Yahoo. I think this is interesting because the Alibaba IPO is due to happen shortly. But the hype was in the lead up to the new high about potential that Yahoo could reap a big bonanza from the IPO, and then everybody soured on social media stocks, and Alibaba's going to go public and Yahoo's probably going to make new lows if the market weakens. Tesla, very interesting name. Power gauge will never turn bullish on Tesla in my lifetime. Why? Because they're just not showing the kind of valuations and earnings that the power gauge likes. And that doesn't mean the stock can't rally, but the power gauge is going to be bearish whenever it can. And when the stock is underperforming the market and the money's flowing out of it, you look for a sell signal and you may get a good trade in Tesla. And I'm going to take one more, which is Intel. In the very strong semiconductor group. And Intel is just powering ahead. It's got a good yield. least it did before the rally. It's still almost 3%. So dividend-oriented investors like Intel. And the group has sort of carried Intel along. The semiconductor group has actually been stronger than the biggest name in the group, which is unusual. And we just got a money flow buy signal this morning in the stock with it getting oversold. So here's a stock which was up 37 cents today in a down market, up 1.2%. And that's after a money flow buy signal. So it shows you the power of this combined approach of Chaikin Analytics, where you get the power gauge rating, the relative strength, the money flow. And with that, I think we're going to close. Well, I see a stock that I want to put up, TSM. So I'm going to give you one more, because just like Whole Foods, I'm sorry, this is Taiwan Semiconductor. I thought it was the fresh market. Here's another semiconductor stock. Power gauge turned bullish in late February. Money came into it, started outperforming the market, and it's moved up from about 19 to 23, and it's pulling back a bit. It's overbought. But again, it was up 2.4% today. Power gauge is now neutral. Obviously, the semiconductors are on everybody's mind. There's a question, why is the power gauge not useful for small biopharmas? Because small biopharmas tend to have no earnings. They're typically speculations on a new product that's in the pipeline that's waiting for FDA approval. On the bigger biotechs like Celgene and Gilday and Biogen, IDEC, and Amgen, it works very well. Power gauge is useful on Tesla because it's telling you to avoid this stock. It's overvalued. You're paying a very high price to sales ratio. And then we'll put up one more chart and ask one final question. GLD, again, we're looking at an ETF. So the relative strength is our guide, and gold has been underperforming the stock market. Not that useful here. I'd want to look at the individual gold stocks. So Royal Gold is a good example of a stock where the power gauge had been bearish all the way down to the bottom. Stock has now turned around a bit, but power gauge was bearish from 70 all the way down to 45, and then it turned neutral, and you've gotten a couple of relative strength buy signals. So I'd rather be in Royal Gold than in GLD. And then finally, we had a question about what the brown line is. It's a triple smooth 200-day exponential average. It has very unusual properties, and it very often serves as a trend line that contains price. So when we were looking at Pandora, it rallied right up to that trend line. When it was in its uptrend, it dropped down to the trend line. When it broke it, it was game over because the power gauge was bearish. So with that, I'm going to thank Steve and Becky once again for being great hosts. I hope we can do this again, Steve. You've got a very active community, and really want to thank you for the opportunity to show you about Chaikin Analytics.
Mark, thank you very much. Excellent information, and once again, the reason I am heavily recommending this this system or this program is, like anything else on Wall Street, if something doesn't work, it doesn't stay around very long. Mark has been around for over 40 years. His stuff, as I said, is not stuff that people put on and look at. His stuff is the industry standard for most of the big traders or the big institutions. So this, once again, just fits into the category of being able to put all the probabilities in your favor. And I wish I'd known about this a long time ago, because this just helps put more confidence behind why the signals are working, and now has a whole nother gamut of this is all the indicators that are starting to work, and this is why the signals are working. So with that, Mark, very enjoyable, very informational. We're going to be talking a lot together from here on in, and I appreciate you coming and doing the session.
I would love that, Steve. Thanks very much. Thanks for the opportunity, and look forward to doing it again.
All right, great. All right, everybody, have a good evening. think seriously about this, because this is stuff that you will probably want to keep around for a long time, because this will put your investing into a very concise, concentrated, high probability trade situation, or put you in the right direction. So with that, everybody have a good evening. We will see you in the chat rooms.